So now we are starting our third learning objective, that is apply the accounting equation to business organization. So from here we are actually diving into our real principle of accounting subject. So here the accounting equation shows the relationship among assets and liabilities and owners equity. So assets appear on the left side and liabilities and owner equity on the right side. So the equation is asset is equal to liabilities plus owners equity. So to answer, apply the accounting equation to business organizations. So a company's financial statements tell us how the business is performing and where it stands. So but how do we arrive at the financial statements? So let's examine the elements of financial statements, which are the building blocks of which these statements rest. So the financial statements are based on accounting equation. This equation presents the resource of a company and the claims to those resources. So number one, assets. So assets are economic resources that are expected to produce benefit in the future, while the here the liability, which presents the outsider claims and which shows that expected future sacrifice, which means how much we have to pay in future to them. The last one is the owner's equity, which means insider's claim or stockholders' interest in the assets. So equity means ownership. So if we see the accounting equation, which is assets is equal to liabilities plus owner's equity. So this is the business. What assets shows the business worth or economic resources, right? So liability shows how much in this business are outsider claim. And owner's equity represents that how much is the insiders or owner's claim. Insiders are the owners that who started the company. So in your book there is an example of gap incorporation. So which we just generally see that what are the example of assets. So the assets include cash and cash equivalents. What do we mean by equivalents? Which means coins like golds or marketable securities. Cash is cash, right? Equivalents means which are very close to the cash. Gold, right, is very close to the cash. That's we call that equitable cash equivalents. Or marketable securities like shares, we can sell it on the same value, which is if it can be shown on the stock exchange, we can just sell it at that price and we receive that cash. So we call it cash equivalent. Inventories, the stock of goods that we are holding right now. Property, plants and equipment. The liability includes accounts payable, federal and state income tax payable, long-term debt, current portion of long-term debt. So if you just focus or notice something, that assets are the business worth and liabilities, if you see it, these are payables, which means payable to what? To outsider. So that's why we call that liabilities are outsiders claim, right? And what do we mean by the long-term debt? For example, the company acquire loan for 20 years, so we call that long-term debt. And among 20 years, every year it has to retire or pay some of its loan, so we call that current portion of long-term attached. So we can also rearrange the accounting information, or sorry, accounting equation. So in that case, if you want to find out the owner's equity, you just rearrange the accounting equation. So what was the accounting equation? It was assets is equal to liabilities plus owner's equity. So if you want to find out the owner's equity, you just take this liabilities to the other side of the equation, and it is assets minus liabilities is equal to owner's equity. So what are the owner's equity? Owner's equity consisted of paid in capital and retained earning. So the owners can claim the paid in capital, how much they invest in the business, plus retained earnings, all those earnings that company did not pay back to its owners, it retained in the business for future use. We call this retained earnings. So paid in capital and retained earnings both belongs to owners equity. So this slide basically presents the definition of paid in capital. So amount stockholders have invested in the corporation, we also call that common stock. And retained earnings, amount earned and kept for use in the business. So retained earnings, for example, it is the revenue minus the expenses that are the profits that are not distributed or left after some kind of distribution, and you didn't pay the 100% profit to the shareholders, you retained for some for future use. We call that retained earning. So revenue is also a part of retained earning. So revenue means inflow of resources that increase retained earning by delivering goods or services to the customers. In simple sense, revenue means sales of the business. And expenses, which represents resources outflows that decrease the retained earning due to its operation, like you are paying tax, the rent, you are paying the raw material cost, you are paying wages, salaries, these are expenses. And dividends, which are distribution to the stockholders, and from where the distribution generated from the profit. So we know that from revenue minus expense, these are profit. This profit belongs to shareholder, but we share less profit. For example, 50% we shared, we call that dividend. So the left 50%, it goes to retained earning, right? So the retained earning formula would be revenue minus expenses minus dividend. So to review, the revenue increase, it also increase the retained earnings. If expenses decrease, it will increase the retained earning. If dividend decrease, it increase the retained earning. Remember, what is the formula? Revenue minus expenses minus dividend. So if we want to increase the retained earning, if revenue increase, retained earning will be increased. If expenses decrease, revenue will be increased. If the dividend decrease, revenue, the retained earning will be increased. So the diagram here shows the relationship among the following: retained earnings and the dividend. So what if you have already the retained earnings? So you have already retained earning, we call that beginning retained earning. For example, which is 2019, right? So you add sales or revenue in 2020, you just minus expenses in 2020, you minus dividend in 2020, and rest of the things would be equals to retained earning of 2020. That's what this diagram says. Okay, in order to further understand the accounting equations, there is an illustration. So I just want you to pause the video for 5 minutes and read the question, and then we solve it together. So here, Blue Diamond Corporation has current assets 360 million, property, plant and equipment of 600 million, other assets total 200 million, current liabilities to 10 million, and long-term liabilities are 560 million. So use these data to write Blue Diamond Corporation's accounting equation, and also find out how much in resources does Blue Diamond Corporation have to work with. Third one, how much does Blue Diamond Corporation owe creditors? The fourth one is how much of the company's assets do the Blue Diamond Corporation stockholders actually own? So let's do that. We know that accounting equation is equal to assets is equal to liabilities plus owner's equity. So we have assets 360, we have plant, property and equipment 600, and other assets 220. So here, what are the company's total resources? Here it is, 360 plus 600 plus 220. And how much is that? 100 and 180,000, right? So what are the liabilities? So liabilities are 210, current liabilities, and long-term liabilities, which are 560, and when you add it, answer is 770, right? So we don't have the equity part. So how we can find out the equity part? Just rearrange the equation and you can find out that it's 410, because equation always balance itself. So if you want to find out how this 410 came from, you just take it to the other side of the equation and you can find out this amount, 410. So now, how much resources does Blue Diamond Corporation have to work with? So these are the total amount 1180, which means assets. The second question is how much Blue Diamond Corporation owe the creditors, which means outsider claims. This is the amount of liabilities. So total liabilities are 770. The last question was that how much of the company's assets do the stockholders actually own? So it is the amount that is 410. That is actually the stockholders or owners of the company, they own or they have invested in the business. So I have included a very critical concept checker here. So just stop and think for a while and just read the questions 1 to 4 and try to answer by yourself. So here, number 1 is if the assets of a business are 360,000 and the liabilities are 120,000, how much is the owner's equity? You know that the assets is equal to liabilities plus owner's equity. So you have this, you have liabilities, and you want to find out owner's equity. Can you find out? Yes, we can find out, and here is the answer. If your answer is 240,000, then you are in good shape. The next one, I have just pasting the answer here. You just need to read the question and do it by yourself and compare the answers here. If you have any kind of difficulty or ambiguity left, then please do write us in our WeChat group or in our Blackboard discussion forum. I would be happy to answer.